Good evening, everyone, and welcome to the second episode of our Equity Market Outlook. I'm Pavitra. Today I have with me Varun Goel, who manages both the Flexi Cap Fund at Mirae as well as the Small Cap Fund. And he's really someone who has experience investing across market caps. So I thought it'll be nice to have him on for this chat. You know, Varun, what we're trying to do over here is just to put our investors in touch with how we are thinking, how we're looking at things. Mm-hmm. Of course, our equity market outlook doesn't change every month, but it's a good way to sort of, touch base with everything that's happened over the last 3 or 4 weeks and just kind of communicate that to the investor. So last month, when I was speaking to Harshad, we really started by saying that the market is a slave to earnings, right? When the earnings pick up, that's when we can really expect to see things pick up. Mm-hmm. And if I look at the last month or October overall, it's when we've seen a lot of the numbers come through.
Sure.
It has been better than expected, right? In spite of deferred payments on GST. So just take me through overall how you look at this earnings season, whatever we've had so far. Are there any hits and misses that, really stand out to you?
Yeah, so good afternoon, Pavitra. Thank you so much for having me. I think broadly the numbers have been either in line with expectations or slightly better than that.
Yeah.
And I think this quarter is kind of the first quarter after 4 quarters of earnings downgrades where things are beginning to look up, right? So in fact, we are expecting 9 to 10% growth for Nifty 50 companies in earnings for FY26. And hopefully things will be better in FY27. And I think the larger story is playing out in the small and the mid cap space because I know last 4 quarters, small caps saw a 15% decline.
Yeah.
Right? So that was a very large decline. And on that base, we are beginning to see a positive shift. And our sense is this year, small caps can do plus 15% kind of earnings growth. So that's a major delta that we're expecting. But broadly, yes, earnings have been buoyant. And hopefully we should see a phase where earnings will start to come through.
Okay, and it looks like we're seeing that even sooner than expected, right? I mean, earlier the talk was that it will take a couple of quarters for this to stabilize and then we can see it. But one space which a lot of people have been talking about is the PSU banks. For so long, there was not much activity. Now suddenly earnings are good. There's talk of consolidation. There's talk on the policy front. And of course, the stocks have rallied a little bit.
Correct.
But do you think that this is the start of something much bigger in this space?
Well, I think broadly, as a space, if you look at PSU banks, they have been delivering fairly good results, right? So asset quality has been pretty pristine. And I think that will stay this way because in this cycle, we do not have those large syndicated loans to big corporates. I think the loan growth has been led more by the retail side. And therefore, we believe this credit cycle will be longer. I think the other major concern was the credit growth number. We have been seeing that running at 9-10%, but I think now with 100 basis points of rate cut, as and when that rate gets passed, we should see a acceleration in credit growth. Also, we saw a rate cut by US Federal Reserve last week, and hopefully we should see another rate cut in India. So our estimation is that in this cycle, we should see 100 to 150 basis points of cut, which is a very large cut, right? And therefore, we expect credit growth to accelerate.
Okay.
So PSU banks are trading at a very reasonable valuation. On an aggregate, they're trading much cheaper as compared to the private sector banks. They have been delivering good growth. They've been able to maintain the margins, which I think has been a surprise of this quarter. They've been able to maintain their NIMs quite well. And we think journey from this point onwards is actually going to be easier. And therefore, we should see good numbers. Of course, there is a lot of talk about deregulation and stake sales. Some large deals have been announced
also
in the banking space.
Increasing the FDI limit.
Absolutely. So I think that will be a great reform measure by the government. Let's look forward to what exactly.
So definitely positive on the full PSU
we continue to be positive on the PSU banking space. Yes.
Okay. So you were also mentioning the good earnings that we saw here. Are there any other pockets that really stand out to you in terms of earnings that we've got so far?
I think broadly the banking space has been good, both public and private. There was so much concerns about NIM compression and all. I think while there has been some NIM compression, but broadly the banks have been able to manage it quite well. In fact, the bigger surprise has come on the smaller banks and NBFCs. I think last year the sector was severely disrupted because of the microfinance cycle going bad. And a lot of these smaller banks had seen losses. And I think things are beginning to turn around. So old private sector banks, smaller private banks, PSU banks, they all delivered better than expected earnings growth. I think second, if you look at it, our sense is even the infrastructure, capital goods, engineering companies, while there is so much talk about consumption getting a revival post GST cuts, our sense is the infrastructure cycle is still pretty much on, and whatever results we have seen so far on that side, seem to be pretty robust.
How was the commentary, Varun, by the way? Because, I also remember talking to Harshit saying that more than the numbers, it's going to be so important to watch the commentary this time around, just on how things are picking up. How has that been for you? Anything that stands out?
Yeah, I think as far as consumer-facing companies are concerned, because the GST cuts got implemented towards the
End of September.
Second half of September. So I think we still have to see, how things play out. But the commentary from what we have heard is, so far things have been on an uptrend and things seem to be looking up. We are quite hopeful that consumer durables, automobiles, higher ticket discretionary consumption items should do well going into the third and the fourth quarter. And let's also remember that there is one more big consumption stimulus which will come in form of 8th pay commission, which I think is getting implemented from 1st January 27. So that will be the third stimulus measure on the consumption side. So I think consumption sector should continue to do well. And I think the infrastructure and engineering, which is kind of forgotten for the last 18 months, that should also deliver good numbers.
Okay. So it looks like quite a few pockets are, looking attractive right now. Just to wrap it up, because we always get this question, from our investors. Ultimately, they want us to narrow it down to a few funds. I know that will be different for everyone. But if I came and I gave you cash and I said, Varun, invest this in one of the funds or maybe 2-3 funds, anything that you would want to choose?
Well, again, that depends on what is the investment horizon. If you have 5-year plus money, and you can see a 30%
Yeah, we are
drawdown.
only thinking 5-year plus money.
Yeah. So 5-year plus money and be ready to see a 25-30% drawdown. Then I think small caps make a lot of sense. And we continue to be pretty optimistic about the whole infrastructure, engineering, capital goods theme. So for those investors who are looking for something thematic, that is something that they can look at.
Yeah. Infra is also a very wide theme, right? I mean, it's not as concentrated as a sector call. So it gets you in on many different sectors as well. So I think that should lend comfort. And of course, small cap is a forever favorite, right? With you and me both. But thanks a lot, Varun, for taking us through all of these, developments over the last month or so, and then also narrowing it down. I hope that helps all of our investors and just, helps us communicate to them how we are looking at the market right now.
Thank you so much for having me. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.